Welcome to Right Side Trading, where you can learn how to trade on the right side with confidence. Today is February 7, 2016. It's a Sunday, right before the market opens tomorrow, Monday, February 8, 2016. What I wanted to do is give you a quick review of the market for our market weekly review. On Thursday, we came out with a video about what we expected the market to do, and the market is doing exactly that. But before we go any further, let me give you a disclaimer real quickly. You can pause this video if you need to read the disclaimer. But in particular, I wanted to highlight this portion right here. Right here. And I'm just going to go ahead and read that real quick. Our testimonies have not been independently verified, nor are they indicative of future results. Our products and services are provided solely for educational purposes. Written and verbal statements, including those provided on our website by staff members, testimony individuals, affiliates, and clients, are personal judgments and should be regarded as such. These written and verbal statements do not constitute investment advice. So please keep that in mind. We're not professional, licensed investment advisors, so please make sure you seek the advice of competent professional advisors for any financial decisions you make. We are only doing this for educational purposes only. All right. Well, let's go into the market. And this is the chart of the SPX. All right. And we came out with a video, like I said, identifying the fact that we were forming a bearish flag pattern, which is a continuation pattern. To learn more about that, go to the video that we created. It's on our YouTube page, Right Side Trader, and you'll be able to see the videos we posted as far as that is concerned. But that being said, there's really not too much more to say for this week, with the exception of the fact that we'll just have to see how the market plays out. Okay. We were expecting the market saying that if the market should close below this trend line right here, which it did, that will be the beginning of the new phase to the downside. And so that is what we are looking at. This is the bear flag that we'll be talking about right there. All right. And this week was very volatile. We had companies like LinkedIn that dropped almost, 43%. If you look at it on the weekly basis, you would see how big of a drop that was in one single day. Okay. Other companies like Data, they did the same thing too. Okay. So, we cannot say that we're surprised. We've been talking about this bear market for quite some time. It reminds me of something. Let me actually pull this up real quick. Which is this, it reminds me of this. This is the emotions that people feel when it comes to the market. And, the market's been rallying. This is the media gets involved, and there's a lot of enthusiasm about wanting to get into the market, and then greed starts setting in, and it gets to a point where delusion starts coming, where people start thinking the market would never crash, it's always going to keep on going up. And when it starts falling, and the market starts, this new paradigm. I actually borrowed this from a guy by the name of Hubert Santers, who was doing a presentation. I watched his presentation, so I borrowed it from him. So I want to let you know that this is not a copy of something original from us. But needless to say, this new paradigm, I thought about this, and I said, that's kind of like what the market was experiencing, where people started thinking it would never come back down again. Everything is just great. Some people were thinking that, we've had the longest bull run in history and all that kind of stuff. But the fact is, I truly believe that people are in the denial stage right now, okay, because the market just started falling, and there's a lot of people that's still in denial. I've been telling people this since July of last year that we're in the bear market, and it seems like people don't believe me. I was even on a radio show last week, and I was, telling the host that we're looking to, trade bearish positions in all the stocks that we trade. And I remember the host was like, "Wow, you are the most bearish guest we've ever had on this show." And I didn't know whether to take that as a compliment or as an insult. But I can only tell you what I really see, and that's exactly what it is. So there's a lot of people that are in denial right now. that we're in a bear market, and a lot of people don't know where it is. Pretty soon, we're going to see some rallies that's going to take place, and people think we're back to normal. We kind of almost actually experienced that this last couple of weeks when people started thinking we're back to normal again. Then it's going to come falling down, and then fear is going to start gripping a lot of people, and the market's going to go into capitulation, and then despair before it starts rolling back over again. So right now, I think we're anywhere between denial and the beginning of fear, because there were some people that started thinking, oh, we could be turning back to normal. It's unfortunate. I've seen people on TV think that the market is really going to make new highs, and I think those people should be taken up on TV and never be shown on TV again. Okay, but that's just my opinion. However, to deny what is happening, that's up to you. That's up to the people who don't know what to see. And I think part of that reason is because people don't really trust or learn how to read charts. Okay, if you see the charts, you will see that this market is heading for something really bearish. I mean, this is just what we're looking at right here, and it reminds me of this picture right here. If you look at the old style of trading, floor trading, where people used to trade in the pit. Even the picture is black and white. This is how people traded back in the day, and they relied mainly on fundamental analysis, which is like old school. The new way of trading is high frequency trading, technical analysis. That's the new way. I see too many people focusing on fundamental analysis when they should be looking at the technical analysis that would tell them what is about to happen. So all those who still focus on fundamentals and not look at technical analysis, in my opinion, this is just my opinion, I think that's the old way of doing things. The new way of doing things is like learning how to see it technically, by looking at charts. It's no different from, people who, used to save information on a floppy disk as opposed to saving information on the cloud now. If you told people back in those days that you could save stuff on clouds, they would go crazy and think it's ridiculous. But, anybody that's still thinking about saving stuff on floppy disks, you can tell that they're just old school. And that's how fundamental analysis is. And I think that's part of the reasons why people are still stuck in this phase of this denial and not really realizing what is about to happen. Okay? That being said, let me get off my soapbox and just focus on what we are seeing now, okay? So if we go back to the daily chart, this is what we were talking about. So we can anticipate this market going lower. Now, for those of you guys who know how we use moving averages to kind of tell what's going on, students of Bausch, we know based on the moving averages that this low is definitely going to be taken out. It's already written. This low is definitely going to be taken out. So we would definitely be making a new low based on some things that we see on moving averages, okay? The question then becomes, after that low is taken out, how far can we go down, all right? And I don't necessarily try to measure how far targets could be because anything can happen in between. But just for entertainment purposes, if we look at a bull flag, typically what happens is once the breakout occurs, you put it right there, and wherever that lands to be, which is somewhere around here that we can expect it to be. Now, this line right here, I'll talk about that real soon. But for the most part, we can expect price to drop from there to there. I talked about it on a video. If you took about 80-75% of that move, we'll talk about somewhere around here, which coincides with, let's go to the weekly chart. Let's go to a daily chart. Let's go daily 3 years. Okay, so let me zoom in right here. Okay, so it basically coincides with this last resistance that got broken and now became support, and it's been acting as support. Or that was the first. This might be the first level of support that we will see it come back down to. Okay, so it came somewhere close to here, bounced back. If we want to be a little bit more technical, we can draw a zone and say somewhere between this line and this line. we should be expecting the market to come down to. Okay, but we know for sure the market would definitely take out. Oops. Okay. We know for sure the market would definitely take out this low right here. Let me do this. This low right here, we know for sure the market would definitely take out that low. And then now whether it comes all the way down here or down here before such reversion, that would be the question. But we know this low is definitely going to be taken out. All right, now that the market is ready to start going down. Okay. The other thing to take note is on the weekly chart. Let me remove all the drawings on this. Okay, on the weekly chart, it is important to note that this low right here, okay, is a new fresh closing low. Okay, this close right here. All right. So prior to that, we had this closing low right here, but now we have a fresh closing low on the breakout of a break, a resting period from the drop back in the beginning of 2006. So everything is just signaling that we are headed for more downside movement and price more downside movement than anything else. Okay, and so those are the things that we're looking at. At this point in time, there's really nothing else more to say than find stocks that you can short, and just remember that no matter what happens, at the end of the day, we need to know how to protect yourself. You need to know when to get in, when to get out. Right now is the time to start getting in. The market is ready for its next phase, and we'll see. We'll see how it ends by the end of next week, maybe even longer. I know that we have taken some short positions, and we plan on taking some more starting Monday. So remember that you can always go to our website and find more information about the courses that we teach. The bouncing stock is one of those great trades to be using at a moment like this. If you learn how to trade based on the bouncing stocks, you'll see what this can really do to be able to take advantage of markets like this. All right. In the coming weeks and months, we'll be coming out with some more videos on or courses that we have, maybe making it a little bit public. Right now, we still have them a little bit private, but maybe we'll start making some of those public so that people can actually start learning from that. For those of you guys who might not be located locally where we are located in Tampa, Florida. All right. Well, that's enough of my soapbox. I hope that you guys are able to trade well. And always remember to trade on the right side with confidence. See you next week. God willing.